Mr. Horace Masada, Chairman of the Board of SYGNUS Real Estate Finance Limited, respective board members, Mr. Beresford Gray, President and CEO of SYGNUS Capital, respective members of the SYGNUS executive team, shareholders, members of the media, fellow team members, distinguished guests both in person and online, ladies and gentlemen, good morning and welcome to the second staging of the SYGNUS Real Estate Annual General Meeting. My name is Gregory Samuels, Head of Investment Banking with the SYGNUS Group, and I will be your Master of Ceremonies for this morning proceedings. It's with great pleasure that we gather here today to reflect on our journey, celebrate our achievements, and set the path for an even brighter future. Since our inception in August 2019, SYGNUS Real Estate Finance has been dedicated to transforming the real estate landscape across the Caribbean region, with a focus on providing flexible financing solutions. We have strived to unlock value in real estate assets by taking concept to completion, thereby driving growth in the community in which we serve. As we convene today, it's important to highlight some key milestones that underscore our commitment and resilience. SYGNUS Real Estate Finance boasts real estate investment asset valued at over US $97.5 million, a testament to our robust investment strategy and prudent management practices. Moreover, our total asset under management, or AUM for short, stand at an impressive $99 million, reflecting the trust and confidence placed in us by our investors and partners. As we look ahead, the opportunities in the real estate sector remain abundant, and SYGNUS Real Estate Finance is poised to capitalize on them. We remain steadfast in our mission to drive innovation, to foster sustainable growth, and deliver value to our stakeholders. In closing, I'd like to extend my sincere gratitude to each of you, our shareholders, our partners, and the dedicated team for your unwavering support and trust in our vision. Today, let us embark on a journey with renewed vigor, determination, and a shared commitment to excellence. Let us now give a warm welcome to our chairman, Mr. Horace Masada, who will officially call this meeting to order. Thank you.
Thank you, Gregory. Thank you, Gregory. Good morning once again.
Morning.
Oh boy, we didn't get breakfast this morning, eh? All right, sorry, we should say 9:30 we're going to start, and we're going to start with breakfast. I'll say it again. Good morning.
Morning.
Wonderful, wonderful. It's a nice, bright, sunny day outside, and it's as good as a day as any other to have our annual general meeting. My name is Horace Masado, and I am the chairman of SYGNUS Real Estate Finance Limited. As Gregory said, this is our second annual general meeting, and I welcome you warmly. I'm advised by the secretary, the company secretary, that in accordance with the company's articles of association, a quorum is present by proxy and in person. The meeting is therefore properly constituted, and I now declare the annual general meeting open. I would like to acknowledge all who have joined us, those in person, persons in this room, and those online. Your presence signifies your dedication to our company, and we value your interest and support. Each year, we look forward to this opportunity to meet with you and to share SRF's accomplishments during the recently concluded financial year. As we did last year, and in order to allow for a wider cross-section of participation, the meeting is being held in a hybrid manner, which means we have persons who are participating in person here and persons who are participating virtually online. The meeting is convened in St. Lucia, and we have a satellite location, which is this one right here in Kingston, Jamaica, from which the proceedings of the AGM are being carried to you live, and shareholders can attend in person or online as indicated. Shareholders will be able to view the proceedings of the AGM, vote on resolutions, and submit their comments and questions by logging on to the e-platform being used to facilitate the AGM. The instructions to access the e-platform were provided in a shareholders advisory notice released on the JSE's website and on various social media platforms. The notice of meeting and the form of proxy were dispatched to all shareholders on record in accordance with the company's articles of association. If there is no objection, I will propose that the notice of meeting be taken as read. Registration for access to the AGM will remain open and persons will be free to register and be admitted at any time during the meeting. Gregory gave us earlier some interesting facts about our company and our performance for the year, and I'll just highlight a couple. He spoke in US dollar terms. I'll bring it home a little closer. I'll speak in Jamaican dollar terms. Okay? So, for the year ended August 31, 2023, the SRF Group reported total investment income of 765 million Jamaican dollars. The net profit attributable to shareholders was $211 million. And the total shareholders' equity now stands at $7.8 billion. Other noteworthy numbers, the earnings per share for the year was Jamaican dollars 65 cents per share. And at the end of the year, the book value per share is $23.89. I'll pause for a moment there because if you look at what's happening with the share price, it doesn't quite reflect what is happening at book. We're trading probably at about 45% of book. But that doesn't mean that the company is not doing well. Total real estate assets under management now stands, well, at the year end stood at 14.92 billion Jamaican dollars. And Gregory indicated 99 million US dollars. Other key milestones. We have successfully completed a built-to-suit industrial facility on Spanish Town Road. And we are pretty much in completion now of One Belmont. At the year end, it was near completion of the One Belmont office tower. And this tower is expected to be one of the most iconic commercial buildings in Kingston. Additionally, the company exited its investment in a third-party real estate development during the year also. This marks significant progress in completing the first investment cycle for the company. Cumulatively, over 4 years of operation, SRF has demonstrated very impressive returns with an average annual return of 22.9% over that period. As SRF transitions to its second investment cycle, it will look to finalize plans for new projects and complete ongoing developments. The company is focused on strategically exiting ongoing projects while actively pursuing new opportunities for value creation. SRF remains committed to returning capital to shareholders and will reward shareholders' investment tangibly in due course. At this point, I'd like to introduce you to the directors of the company. In addition to myself, as chairman, we have with us this morning Mr. Linville Freeman, Mr. Freeman is also the chairman of the audit committee. We have Miss Elizabeth Stair, we have Mr. Pierre Williams, and we have Mr. David Cummings. I will tender apologies on behalf of Mr. Ike, Dr. Ike Johnson, who is unable to join us this morning, but he is also a director of the company. We also have with us our company secretary, MSCI Incorporated, who is sitting in St. Lucia, and they are represented by Mr. Rory McNamara and Ms. Valerie Rapier. Also in attendance, we have several members of the management team with us. We have Mr. Beresford Gray, CEO of SYGNUS Capital Limited. He is attending virtually. We have Mr. Jason Morris. He's right here with us on the front row. And Mr. Morris is the Chief Investment Officer of SYGNUS Capital Limited. We also have Ms. Sterling Hudson. She is the Chief Legal and Compliance Officer. Mr. Gregory Samuels, and he gave you the opening remarks. He's the Senior Vice President and Head of Investment Banking. We have Elizabeth James, who's Head of Wealth. We have Monique Anthony, Miss Monique Anthony, Chief Financial Officer. Ms. Yashi Hall, VP and Head of Risk. And Mr. Andrew Foreman, AVP Legal Counsel. We have several other team members here. I recognize you all. The chairman of our investment manager, SYGNUS Capital Limited, Mr. Milton Brady, is also attending virtually. I would also like to acknowledge the presence of some specially invited guests. We have with us this morning KPMG, who's represented by Zafir Newman and Damien Reed, Mr. Damien Reed, and they will be presenting to us later this morning the report of the auditors. We also have with us representatives of the registrar and transfer agent, the Jamaica Central Securities Depository, and we have two representatives with us, Mr. Giovanni Lynch and Ms. Mahalia Crawford. With the exception of the apology for Dr. Ike Johnson, there are no other apologies based on my information from the company secretary. Minutes of the meeting held on May 3rd, 2023, not 2024, sorry. Okay, so our first annual general meeting, the minutes were presented and we have been reliably informed that they are present and accessible on the company's website, and they are a true and correct record of the meeting. Copies of the minutes, as I say, are available there on the website. So let's talk about the purpose of this meeting. The purpose of this meeting is to receive and consider the financial report of the company for the financial year ended 31 August 2023, together with the auditor's report. The AGM is also to consider, and if thought fit, pass the respective resolutions duly set out in the Notice of Annual General Meeting dated the 27th of December 2023 and duly signed by the Company Secretary. Before moving into the formal business of the AGM, there are a number of procedural guidelines I would like to bring to your attention. So very important, voting. For those persons who are attending in this room, you will vote by a show of hands. When prompted, you will vote for, or if your vote is against, you wait until that prompt comes and you vote against the resolution that is presented. The scrutineer present will take account of the number of hands raised for or against a resolution, and this total will be added to the shareholders who voted virtually via proxy. If a voter abstains the vote will not be included in the count. Each shareholder or proxy present will have received a red or yellow band, similar to the one on my hand here I'm holding up. When raising your hand to vote, please raise the hand with the band on your hand. For persons voting virtually, you will have a prompt that will appear on your screen, and you will click Vote Now when that prompt appears. And when that prompt opens up, you will select For or Against to signify your vote, and then select Submit at the bottom of the screen. You will be asked to confirm your vote. Select Yes to confirm your vote, or select No if you want to change your vote. Casting votes by proxy. So if you're casting a vote by a proxy, the company secretary has advised that a number of valid proxies have been received in relation to these resolutions. In relation to the proxies where the chairman has been appointed to vote, I will vote all proxies in favor, in accordance, with the directions provided. Where undirected proxies have been given, I will vote the undirected proxies in favor of all resolutions. For the remaining proxies, the proxy holder must attend the meeting in person or virtually to represent the member. These proxies will be deemed valid once the registrar has confirmed the attendance of the appointed proxy holder. Proxy holders are also permitted to cast their votes online in cases where the shareholder has not indicated their vote on the proxy form. Upon confirmation of the proxy holder's identity by the registrar, they will be granted permission to participate online. Mr. Andrew Foreman will act as scrutineer. Mr. Foreman, and he's present in the room, okay? He will act as scrutineer and will confirm the vote by a show of hands as well as those received online to determine the total votes for each resolution. At the close of voting for each resolution, I will announce the result. Now, one of the important matter, questions and answers. Now, it's your meeting and the shareholders are here and you're going to want to, get a better understanding of matters. So we expect you to ask questions. We will have 2 question and answer segments during the meeting. The first segment will be prior to the adoption of the resolution for the audited financial statements. Immediately prior to the first segment, the investment manager, so subsequent to the auditors presenting the report, but prior to the vote, the investment manager will make a presentation on the company's performance and the outlook. At the end of the presentation, shareholders will be given an opportunity to ask questions on the financial performance of the company. We have allotted 15 minutes to this segment to address any queries you may have. That segment of the proceedings will be moderated by Mr. Gregory Samuels, our Master of Ceremonies. After taking the remaining resolutions, there will be a second question and answer segment where shareholders can ask questions relating to the company's business. We have also allotted 15 minutes to this segment to address any questions that may be raised. For shareholders attending in person, if you wish to ask a question, please indicate by a show of hands. One of our hosts will provide you with a microphone. We ask that you state your name prior to asking your questions. For shareholders attending virtually, if you wish to ask a question, select the Q&A option on your screen, enter your question in the box provided, the text box provided, and then click Send. Your question will be read aloud by one of the hosts so that other shareholders can hear. To ensure the AGM's agenda can be completed on time and to provide an opportunity for all shareholders to pose questions, we ask that shareholders limit their questions to 2. Questions and comments from the floor should pertain to the specific matter under consideration at the time. With this background, we will now move into the formal business of the AGM as set forth in the notice of the meeting and the agenda. In order to conduct an orderly meeting, we will follow the agenda as outlined. I will now present the formal business of the meeting, and we will address each resolution in the order as outlined in the notice. So, resolution number 1. In accordance with Article 195 of the Company's amended and restated Articles of Association, the company is obliged to lay before the meeting, or this meeting, the audited financial statements together with the reports of the auditors and directors, which are contained in the company's annual report for the year ended 31 August 2023. The audited accounts were circulated and are now before the meeting for discussion. I will now invite the representative from KPMG, Mrs. Zafia Newman, to come and present the auditor's report.
Hi, good morning, everyone. You can hear me perfectly?
Right.
No?
That's a talking.
Yes?
Sure.
Oh,
Sure,
that sounds better. Hi, good morning. I'm Zafia Edwards Newman, and I will be going through the audit report this morning. So just to let you know, the company is incorporated in St. Lucia, and therefore we are not required to read the auditor's report as per the laws of St. Lucia. However, because the company is listed on the Jamaica Stock Exchange, we will be going through the key sections of the report. Okay, so turn with me to page 41. Independent Auditor's Report to the members of SYGNUS Finance Limited. Opinion. We have audited the financial statements of SYGNUS Finance Limited, the company, comprising the separate financial statements of the company and the consolidated financial statements of the company and its subsidiaries, the group, set out on pages 48 to 110, which comprise the group's and the company's statement of financial position as at August 31, 2023, the group's and the company's statement of profit or loss and other comprehensive income, changes in equity and cash flows for the year then ended, and notes comprising significant accounting policies and other explanatory information. In our opinion, the accompanying financial statements present fairly, in all material respects, the financial position of the group and company as at August 31, 2023, and the group's and company's financial performance and the group's and company's cash flows for the year then ended in accordance with IFRS standards as issued by the International Accounting Standards Board, IFRS standards. Now turn with me to page 42 and I will take you to key audit matters. Key audit matters are those matters that, in our professional judgment, were of the most significance in our audit of the financial statements of the current period. These matters were addressed in the context of our audit of the financial statements as a whole and informing our opinion thereon, and we do not provide a separate opinion on these matters. Now, the first matter, valuation of financial investments measured at fair value through profit or loss. Now, at the left of the column, key audit matter, I'll start there. The valuation of the group's investment amounting to $1,568,613,000. 2022, $1,733,059,000 includes significant assumptions and judgments about the performance of the counterparties over the tenure of the investments. The most significant are those related to expected cash flows and the discount rate that reflect the receiving of the cash flows. Furthermore, the valuation methodology relies on unobservable inputs such as risk-adjusted discount rates, which have a significant impact on the resulting values of the investments. These judgments and assumptions could result in estimated fair values that are materially different from actual transaction values. See notes 2D, 6, and 24 of the financial statements. Now to the left of the table, how the matter was addressed in our audit. Our procedures in this area, in the main, including the following: assessed the group's investment model and obtained contracts and term sheets to understand the terms of the investments. Involved our own valuation specialists to assist us in assessing the reasonableness of the valuation methodology employed and the fair value conclusions. We considered the requirement of the financial reporting framework and tested all the sources of the data and underlying assumptions utilized to value the investments and evaluated the impact of any variations. Assessed disclosures relating to the fair value through profit or loss investments, including those relating to the degree of estimation uncertainty involved in determining fair values by reference to the requirements of the financial reporting framework to evaluate the clarity of those disclosures in communicating key judgments and estimation uncertainties. Page 43. The second key audit matter was valuation of investment properties. Now again to the left of the table. The group has significant interest in investment properties which are measured at fair value, amounting to $10,443,270,000. 2022, $9,430,686,000. The fair values of these properties are appraised by a qualified independent valuator hired by the group using the market comparable approach or income approach. The valuation of the group's investment properties requires significant estimation given the infrequency of trade in comparable properties in some cases and the absence of a number of observable recent market prices, which is impacted by uncertainty of market factors, pricing assumptions, and general business and economic conditions used in valuing these properties. These judgments and assumptions could result in estimated fair values that are materially different from the actual transaction values. See notes 2D, 3H, and 12 of the financial statements. Now to the right section of the column. Our procedures in this area, in the main, included. With the support of our own valuation specialist, we assessed the methodologies and assumptions applied in determining the fair value of investment properties. For each property, we determined a range of prices and compared these to the values determined by the group's expert. In order to derive our range, one, for the fair values determined using income approach, we assessed the appropriateness of the valuation model using our own experience with properties of these types, making our own assessment of a range of discount rates and capitalization rates by reference to external sources to the extent available, and performed our own fair value calculation to obtain the range. Two, for fair values determined using the market comparable approach, we determined a number of comparable properties by reference to factors including zoning, physical characteristics, and environmental factors to derive our own range. Now on page 44, just to complete the table, we evaluated the competence, independence, and experience of the group's independent valuators with reference to their qualification and industry experience. We assessed the fair value disclosures relating to investment properties by reference to the requirement of the financial reporting framework to evaluate the clarity of those disclosures in communicating key judgments and estimation uncertainty. Now turn with me to page 47. And on page 47, I'll read to you the last two paragraphs on that page. Are we there? Okay. We communicate with those charged with governance regarding, among other matters, the plan, the scope, and timing of the audit and significant audit findings, including any significant deficiencies in internal control that we identified during our audit. The engagement partner on the audit resulting in the independent auditor's report is Lisa Brathwaite, KPMG, Chartered Accountants, St. Lucia, October 30, 2023. Thank you.
Thank you, Zafian. Now we'll have Mr. Jason Morris, who is the Chief Investment Officer of the investment manager, SYGNUS Capital Limited. He will come and present to us on the performance of the company during the financial year, and he will also make a presentation on the outlook going forward. Jason.
Morning, everyone. I spent a few moments just giving some background and on SRF and its achievements since the company started. Then I'll go into the financials, and then I'll go into a few strategic updates. Okay, let's get into it. So just as a background, SRF is in its what we call its first investment life cycle. To back up a bit, so when we started the firm, when it was an idea on paper and went to shareholders, our intention and what we said was, okay, first we're going to look for some quality real estate in good locations, do some acquisitions of those investment properties, invest in some third-party investment projects, and on average, 3 to 5 years is what we would expect our investment horizon to be. So on average, we would expect that based on where we are coming to the end of our first investment life cycle. So as you can see, the company started at the back end of 2019, made its first set of investments in 2020, during the middle of COVID, a lot of investments as a matter of fact. And then in 2021, as you can see, you are able to see the number of, or the value of the investments that we have done each year, and how much money we have gotten repaid, or our exits as well each year. I'm not going to go into every single year. In 2021, I want to highlight the fact, though, that that's when we would have started what is affectionately called Spanish Penwood. That's the Inca headquarters that was at the end of the financial year, was almost completed. Well, I guess it was completed. And subsequently, we have exited the majority of our investment in that, which I'll go through in more detail later on. And during that year as well, we would have partially exited one of our largest investments, which is Miami Bay. So we effectively bought a very large plot of land and subdivided it and sold off half of it. So, we exited half, and the remaining half we have, which the value of it has gone up, obviously. In 2022, that's when, our financial year 2022, that's when we started what we are calling the most iconic building in the Caribbean, commercial building in the Caribbean, my words, which is One Belmont, which I'll give some more update on that later. So that's a very important thing to think about in terms of when we started One Belmont. We were still in the throes of COVID, and of course, you can pass by every day and see the building from the road, and hopefully soon enough you can walk in and touch it yourself as shareholders. Would have also exited a part of Spanish Penwood in that financial year, although from a financial reporting perspective, it wasn't accounted as an exit just because of the accounting rules, but effectively we got half of the cash during that financial year, which to us represents an exit because we can use that cash. Then, in the current financial year, we would have had 3.1 billion in investments and exited 0.88 billion, including Nabu Basa, which was an investment win. Subsequent to the end of the financial year, of course, we would have continued our partial exit of Spanish Pedwood, and then we would have also achieved the practical completion of One Belmont, which I still can't believe that we have actually, from an idea on paper in 2019, company started operations in the middle of COVID. To have achieved that, I have to give kudos to the real estate team led by David over there, and I see some of the real estate team members sitting over there, so hats off to you guys. And of course, we are going through the throes of exiting a couple of active exits in excess of $2 billion as we speak of other real estate investment projects. Now, in terms of value that has been unlocked for shareholders, you can see on the screen that 4 years of profitability and the average return and the equity investment in the firm is about 23%, which is very important. And I need shareholders to understand that we are investing and deploying capital into hard assets in the ground. These are not bonds or stocks, etc. You have to deploy capital up front, and then manage the execution of that capital in the ground, and then harvest or exit, and then we can rinse and repeat the cycle. And our objective is to basically, where we have a business model where we think that we can repeat this over and over and over and over and over again, each investment cycle. So far, the cycle has not completed, but so far, one could say that we have a good start in terms of the return on equity that we have generated. However, and I wasn't going to come to this AGM and let this slide. On the screen, what we have is the book value of SRF, which is the blue line, and the red line is the stock price. And I'm using book value, which basically is the base. The book value doesn't represent the value of the firm, obviously, right? The book value is just the base to say if I liquidate all the assets that I have on the balance sheet, extinguish all the debt that I owe, sell off all the assets that I have, what value would I get per unit of share, right? That's what book value represents. And then the stock price is, okay, what do investors think the firm is worth? And clearly there's a massive dissonance between what the market thinks the firm is worth and the base valuation of the firm, which is represented by book value. Although in my world, you can have multiples on top of book value. So clearly, based on where the share price is, and I think maybe on Friday or yesterday it was maybe at $11, that's still down more than 50% from what the value of the assets that we have on the balance sheet is. So put another way, the company has about 7.6 billion in equity, total equity. 4 billion of that is share capital, which means 3 billion represents all the improvement upon the share capital that we would have generated over the past 4 years. But if the stock is trading at $10.49 or $11, what it's basically saying is that the market thinks that not only will that $3 billion that we would have unlocked in value over the last 4 years disappear, they also think that a part of the share capital would also disappear, which obviously I'm going to say that that is not the case, and so I'm representing that clearly by whichever measure you want to use. The firm is substantially being undervalued by the market. Now, I understand that we are in a very high interest rate environment, and I also understand that we promised to pay dividends in 2023, and there's been a delay in us fulfilling that commitment, and I'm not coming up here to hide. As you know, I'm not a guy who hides. Everything that I say, we stand up to what we say in terms of our commitment. So, of course, I go through the strategy. In the strategy section, I'll explain a little bit more in terms of where we are in terms of, paying dividends and all of that. But this chart, I'm going to every AGM I'm going to come and put it up on the screen, and hopefully the next AGM, when we get here, and the next AGM and the next AGM, we are seeing a closing up of that gap between share price and the base value of the firm, which is book value, right? It doesn't make any sense to me. Now, into the financial highlights for the financial year under review. So there were some substantial achievements. Spoke about One Belmont, which the chair also spoke about, which at that time was at 95% completion. Subsequent to that, of course, would have achieved practical completion in December. And now, the prospective tenants are arranging or have started, depending on which one you're speaking about, their interior build-out. And we expect certainly occupancy to start sometime in 2024. So, One Belmont is like the flagship project for SRF, and that is now effectively done and dusted from an execution standpoint. The remaining part of that now is to structure our exit, which, I'll get into a little bit. Next thing is Spanish Penwood, which at the time of the financial year, it was 100% practical completion, and we would have exited the majority of our investments in the opportunity. We have a small piece left, and this small piece, it may be that we may exit it, or we may choose to optimize the value of it for ourselves, right? Next thing I want to highlight is the fact that since inception, during the financial year, our total deployment would have amounted to 14.3 billion, including all the properties that we would have acquired, and we would have exited $3.9 billion. This 3.9 billion, as I would have mentioned before, included the 50% exit of Spanish Penwood, which was about 500 and something million. And then finally, value creation for two very strategic assets on the balance sheet, which are Lakes Pen and Mammy Bay. And I know that I've been speaking about Mammy Bay on earnings call a lot, and everybody's saying, well, what's happening? Well, it's 14 acres of beachfront property. You don't execute 14 acres of beachfront property like that, right? It takes a lot of ingenious work and diligence, etc. So we are working through, and once we feel confident enough to come and reveal what the plans are, we will do so. So just be a little bit patient. The land is there, you can walk and pass and touch the wall. That's around the land, it's there, it's safe, don't worry about it. And Lakes Pen, likewise, is a large property, it's 55 acres. Same thing, it takes time to execute. And as you can see, by the diligence that we put into the two projects that we conceptualized and executed ourselves, you have to say that Spanish Penwood and One Belmont so far have been excellent in terms of the product. And I'm sure that the pension funds in particular who participated in Spanish Penwood are smiling all the way to the bank. And I'm sure that when it comes to One Belmont, and we'll hope to give ordinary investors an opportunity to participate in One Belmont as an investment. When that time comes, I hope you'll all participate. So stay tuned and look out for that later on during this year. Now, in terms of the actual financial performance for the financial year under review, I start just showing a few highlights. Interest income was 253.5 million, up from 217 million previous year. And the reason why I'm highlighting this is because in previous periods, interest income would have been, not so robust. However, as we would have indicated during several earnings calls, our strategy is always to ramp up our investment in what we call real estate investment notes, which is the primary way through which we generate interest income. Because we are not going out to buy bonds and those type of assets. We're a purely dedicated real estate investment company. Also, what would have been very apparent to everyone is that because we don't go out and buy real estate assets for lease income, then we didn't have much lease income, right? But as we would have stated on quite a number of earnings calls, one of our strategy was as we execute and complete some of our own projects that we have developed, then the idea there is perhaps hold on to some portion of those assets for the lease income and then exit at a later date at a higher valuation, which makes sense, right? So total investment income was 765.6 million versus 1.35 billion the previous year, and the substantial reduction in total investment income was driven by the fact that as we get towards the end of our investment life cycle, both our fair value gains and our total investment income are going to actually go down, right? Because during the first couple of years, as I would have shown on the previous chart, we would have effectively generated a lot of those gains. So as we get to the end of the life cycle and start a new life cycle, we exit our investments and then start doing new investment, we expect to see a ramp up in all of those lines of income. So net profit as a result of that was 211.4 million, down from 693 million in the previous year. And then, however, shareholders' equity was 7.8 billion, a little bit above the 7.59 billion in the previous financial year. And as I would have shown on the previous chart, book value per share, would have continued to maintain its position at $23.89 versus $23.24. Now I'm going to go through a couple line items on the actual face of the income statement itself, right? So as you can see, I mentioned interest income already, which was important for me to point out, but you can see that interest expense was 319.3 million, substantially higher than 149 million in the previous year. And this was really driven by mainly one action. Yes, interest rates went up higher, but it's really the substantial increase in the use of debt. Why? Well, effectively, as we get towards the end of our execution in the first financial year, we are effectively bridging the exit. So we have one Belmont, right, which we are structuring the exit of that, but we don't want to wait until we have exited one Belmont before we start our other projects. In effect, we can't sit and wait and say, okay, let's wait until we get back all the cash from one Belmont and then go and start. You need to start the process for your new investments before. And so while we await many of the exits that we have in train, we effectively leverage the balance sheet slightly because our total liability is about 7 billion and the assets on the book is double that at 14.5 billion thereabouts. So our debt to equity is 0.5, which is, so the balance sheet is very lowly leveraged. We're not taking on unnecessary risk by having a whole pile of debt relative to the amount of equity that we have. So that's prudent to do that. So obviously, during the period when you bring on that debt to bridge the exit of the projects that we are currently completing and executing, then interest expense is going to rise during that period. And so because of that, you have negative net interest income of 65 million. However, you'll also see simultaneously that lease income, which was just 60 million the previous year, jumped to 60 million. And that's because, of course, we completed Spanish Penwood and we still have a part of that we're generating lease income from. And as I said before, as one Belmont start to earn lease income, then as SRF structure the way that it wants to exit the asset, and let's say it holds a particular percentage on its balance sheet, then lease income is also going to increase. So what I'm trying to say is that the company is just 4 years mash old, and these are hard assets in the ground, and you have to invest upfront and then manage the execution and then exit. So it's not a simple matter like you're going to invest and buy some repos and you're always getting the interest income every single day. So we are pretty confident in the strategy that we are deploying, and as we go through time, as I said before, as we get to go through the end of the current life cycle and start the next life cycle, you see the balance sheet and the income statement shifting in that regard. Of course, gain on investment property of 431 million was lower than the previous year, again for the same reason that I outlined before. And then share of gain on joint venture, primarily reflecting one Belmont, again is lower than the previous year because you would have already taken most of the value involved in the execution of the project would have come in the previous financial year. So now our job is basically to execute and crystallize those gains and get the cash in our hand, which of course is what we use to make our first dividend payment. So I just wanted to highlight those assets on the face of the income statement for shareholders. Now I'll move a lot faster. There are two ratios that we look at in terms of how we are managing the firm that deals with expenses. And one of them is called the management expense ratio, which is the operating expenses divided by the total assets under management. And we set a threshold for ourselves of 3.5%, where we want to consistently remain below that. And as you can see, we have actually maintained, we were below that during the financial year. The second one is called the efficiency ratio, and this one is basically looking at your operating expenses versus your core revenue. And obviously, we were out. We missed that target in this financial year because we came in at 59.2% versus the 45% target. But that's not really unexpected. And, because of the timing of some of our exits, obviously we generated substantially lower total investment income during the current financial year, which would have triggered us missing that target. But we are pretty confident in our strategy to get back within the 45% threshold level that we have set ourselves as we exit the current investment life cycle and enter the new investment life cycle. In terms of investment activity, kind of went through some of these numbers before, so I'm going to speed through this. 14.9 billion in total real estate investment assets versus 13.14 billion the year before. In terms of how that amount is broken out, three different categories. You have the investment property, which comprises the vast majority of the balance sheet, 11.56 billion, which again brings me back to the book value chart versus the stock price. 11.56 billion is in investment property, which is effectively undeveloped real estate. We have real estate investment notes, 1.83 billion, which is down from 2.48 billion. And the reason why this is down is because we have started to exit some of our real estate, third-party real estate investment notes. So as we exit, the value will fall, but then we are going to redeploy that capital into new real estate investment notes in the second investment cycle. So you're going to see it fall and then gradually rise. And then joint ventures, 1.54 billion, which was larger than the previous year. That's because of the value being driven by One Belmont as it gets closer to completion. Then obviously we are getting more, even though the amount is less than the amount that we got this year was less than last year, it increased the overall balance sheet value. But as we go through time, investment in joint ventures will probably go down. For example, when we exit One Belmont and then go back up as we start new joint ventures to replace One Belmont by redeploying the capital. And of course, during the year, we would have deployed 3.1 billion versus 3.4 billion in previous year. In terms of the quarter, post the end of the financial year, spoke about Lake Spend already. Well, Lake Spend would have started in terms of the value creation process. Would have, gone through a number of iterations as to what we want to do with that huge industrial property. And that process started during that quarter, so you can look forward to us providing updates on that as you move through that value creation process. One Belmont would have moved to 98% completion from the 95% during the financial year, and of course, as I said before, achieved practical completion, and now we are going through interior build-outs, etc. And of course, I spoke about the exits from the first investment life cycle and the book value per share, so I won't spend too much time on that again. And this is the actual financial results that would have been presented at the end of the first quarter. And as I've said on every single earnings call, except when I present the year-end figures, the way how SRF is currently structured, during the quarterly interim financial presentation, we're gonna see where SRF is generating, negative net profit or loss, just because of the nature of how SRF operates, which is we are in the business of creating value and then extracting that cash at the end of the value creation process. This means that we are in the business of generating capital gains, a lot of capital gains. But the accounting rule says we can only value the real estate assets once per year, and we have chosen to do that at the end of the financial year. So, for example, if I have a US dollar asset, I have a real estate asset that's valued in USD, and I, borrow against that real estate asset, and the exchange rate move on my liability, the money that I borrowed, I can't mark to market the asset value at the same time when the liability is moving, right? it's just the nature of real estate investing, and we are fine with that. The important thing for shareholders is, are we crystallizing those values such that we can give you dividends and redeploy and repeat what we are doing each year. So we had total investment income, which was a loss of 31 million versus positive 21 million in the previous quarter. And then net investment income was 114 million loss versus 82.4 million in the previous year. But in terms of profitability, we had a slight improved performance in terms of a net loss of 133 million versus a net loss of 172 million in the previous year. As I said before, don't be too concerned about the quarterly loss. It's just because of the nature of how SRF operates as a company, where the value of its assets are being repriced to cover its operating expenses. Shareholders' equity was 7.67 billion versus 7.42 billion in the same quarter previous year, and then book value per share was $23.48 versus $22.71 in the previous year. Investment activity, not a huge amount of changes, so I won't go through this too much. I mean, roughly 15 billion in investment assets, roughly 11.6 billion. Of that is the property investment, 1.86 billion, 8.5 billion in REINs, 1.54 billion in joint ventures, and exits 388.68 million during the quarter, which represented a partial exit of Spanish Penwood. Now, I'm going to spend a lot more time on the next maybe 4 slides. Not on this one. So this just gives you the listing of our real estate investment assets. The one that you see highlighted, One Belmont, that's because it's a flagship asset, which we are about to, well, we are going through the process of structuring the exit. Lakes Pen, we have started the value creation for that, meaning actual execution of the value creation. Miami Bay, that's a very large strategic asset on the balance sheet that we continue to work through the value creation, which was started quite a while back. And in Spanish Penwood, which would have exited. So you can see that outside of those 4, there are quite a number of other assets that we have on the balance sheet, which obviously we can extract value from. Now, just to give you a little bit of highlight, for those who may be the first time that you come into SRF's AGM, this is Spanish Penwood, 32,500 square foot, built to suit industrial facility. Of course, the lease, 10-year renewable for 10 years is in USD, US dollars. We have completed the project. We have exited a large part of it, as I said before, and you can walk past and go and look at it all day, every day. It's there, and it's going to remain on the Jamaican landscape for a very, very long time, right? So it's there, it's real. So, as you can see, this is an industrial asset. So we have developed and honed our expertise now on doing industrial developments, because doing a development during the middle of COVID, when you had all kind of logistics challenges, etc., isn't very easy. So we have basically gained about 100 years worth of expertise in executing this project. And so what that means is that, call to action, all of you out there who may have, you want to do a industrial project and you have the land already, just come and talk to us and we will assist you to unlock the value from your industrial assets, because we have the proof. It is no longer an idea on paper, we have actually done it, right? So looking forward to the additional calls to David and the real estate team. Some other pictures of the building, just to show that it's real. So we took your money and executed a very lovely project. And the pension funds who are invested in this are smiling all day, every day. This is One Belmont, again, 79,000 square foot commercial. So notice we had industrial, now we have commercial. So again, this is by design that SRF focused on certain areas of the real estate market that we thought were underserved and that we could develop a differentiated expertise in, and then just rinse and repeat that forever and create value for shareholders. Again, pretty much all the floors are, you could say that they are all leased, right? They are all hard currency or index hard currency leases with long-term horizons. And as I said before, we are working through structuring how we want to exit it. Again, we'll give you some information in terms of participation for you as shareholders to come and own, even though you own shares in SRF, which means that you own one Belmont at the moment, but when we structure the partial exit, you can also own the real thing yourself. So look out for that later on during this year. And again, just in case you're wondering, it's real, you can go and touch it. Beautiful views. And once again, we're giving you a sneak peek of how inside of the building is gonna look. So it's a phenomenal building. Again, kudos to David and the real estate team and Ike, who use their ingenuity to create this concept on paper from scratch, and it's now, realized. Next two slides. This is Mammy Bay, and again another real piece of land. You can see where it's located, right as you come off the highway. And so we are working through the value creation for this. And as soon as we are comfortable with what we think the value creation process should be, then we'll reveal that to you. But as you can see, it's carrying on the book value on the balance sheet at 5.72 billion, and we continue to make progress on that. And finally, Lake Spen, which is industrial. So you can see I've shown you industrial, I've shown you commercial, I've shown you hospitality. And you might say, well, where is the residential? Well, we do residential as well, and most of the residential that we have done is really third-party REINs. We haven't done any residential ourselves, but our first residential project will, whenever that day may come, we will obviously reveal that to you. But again, we are very deliberate about what areas of the real estate market we focus on in terms of, executing projects. Now, the interesting part for the last 6 minutes, if I have 6 minutes left, I want to let shareholders and well-wishers and partners and everybody understand that, SYGNUS, as the investment manager of SYGNUS Real Estate Finance, is very serious about being around for 1 billion years, right? Long outlive the persons who conceptualize the idea of SYGNUS. So the first thing that we want to show here is that we came and said, okay, this is our strategy. We are now going through a phase where we are dialing down to exit, and then we're going to ramp back up. And because of that, we decided on our own, so this is not a situation where the board came to us and said you need to do whatever. We went and proposed to the board that during this period, we want to do two things. So we are going to, I guess this is, and we consider this as enhancing the alignment between the investment manager and shareholders. And I'm a shareholder myself, just in case you're wondering. So by reducing the management fees by 50% to 1%. So from 2% in the previous, from SR started, the management fee was 2%. Reduce it to 1% in the 2024 financial year, which will then increase slightly to 1.25% in the 2025 financial year, and then go back to normal in the 2026 financial year. Why are we doing this? Well, I mean, as I said before, we explained when we started that we're going to have life cycles, and the average investment life cycle is going to be 3 to 5 years. We are now going through the end of the first investment life cycle, and as you get to the end of our investment life cycle, what is going to happen? Well, your investment activity is going to decrease because you need to harness that cash, and then you redeploy. And redeploying in real estate is not you go out and just invest $1 billion or $3 billion one time. If I'm doing a project, it's going to be a schedule of 18 months or 24 months or 36 months of deploying the capital based on a drawdown schedule. That's how real estate operates, right? Unless, of course, I'm doing funding a third-party REIT. And even when I'm funding a third-party REIT, it's the same thing that happens in 99% of the cases. So during this period, obviously, the company is going to have less investment activity because now we are harnessing cash, we're getting back cash, and we can use that cash to pay dividends and do other things. So we felt it prudent that during this period, we reduce our management fees, which is, there's nothing funky about it or anything like that. If you look at Blackstone, Ares Capital, Golab Capital, a whole host of alternative investment managers who are focused on the alternative investment channel like we are alternative focused company, that's all we do every day, then this is what they do from time to time to align the manager with shareholders, and that's what we are doing. So we are voluntarily giving shareholders, aligning ourselves more with shareholders by reducing our management fee during this period. And as we get to the other end of the investment life cycle, we start aggressively redeploying capital, then our management fee will normalize. So that's the first. The second has to do with, and maybe I'm not sure how much I should go into this, but I'm going to give you my view as investment manager anyway. So this is the PIC shares and subscription warrants, which again represent an alignment of the investment manager with the interests of shareholders. So 377.9 million is owed to the investment manager for performance fees that was generated during the first 2 years of the company. How did that come about? Well, primarily from two main things, right? One, the investment manager, or maybe I should say the structuring expertise in the investment manager, went out, identified some properties, and figured out a way how to actually structure an acquisition of those properties at below the market value that could be held for those assets. And in one instance, the value of the asset pretty much doubled, right? Which generated substantial one-off upside for shareholders, which is now part of the book value that shareholders can enjoy. And therefore, as we go through time and we are executing and exiting, that value that the investment manager would have used its expertise to structure is what generated those gains, right? So that amount of money is owed to the investment manager. Now, as we look at where we are in the life cycle, obviously, we would have wanted to exit a lot of our investment before now, but we had that little problem of 2 years of COVID that put our works into how fast we could execute. But we are here today, and we have two lovely buildings that we have completed that you can see, and we're starting the process and some other assets. So effectively, this money was due from 2022, and we decided that, hey, let's see how this plays out, because at the time we are in COVID, etc. So now we are coming to a stage where we looked at where the stock. We looked at everything and we said, you know what? Let's provide an option for the firm, if it wants to choose to, instead of giving us cash, hey, give us some shares in lieu of the cash. Why? Why does that make sense? Well, I showed you the chart with the book value of the firm and where the market is pricing the shares, right? So the market is pricing the shares at $10 or $11 something. We believe that clearly there's value in those shares, and as an alternative option, we can take payment in shares rather than the cash. So we went and made a proposal to the board, and the board accepted it, and the strike price for that was $18.25, which is based on when the money was actually due in 2022, sorry. But today the shares are trading at substantially below that value. So that $18.25 converted at the 377.9 million amounts to 20,707,342 ordinary J-dollar shares. So one might ask the question, well, if the manager is willing to take these shares at $18.52, suppose the manager knows something that we don't know, and that's the reason why, obviously, they are perhaps opting to put this as an option to execute on. So when we thought about that, we felt that, okay, let's do some math. So in terms of the 20,707,342 shares, it has a dilutive effect of 6%. But what does this really mean? It means that if you own 10% of the shares, for argument's sake, then the dilutive effect really means that you would now own 9.4% by the issuance of these new shares to the manager. So you can see that the percentage change is not that much, right? However, if you look on the flip side, if the manager were given the cash today, I could go out and buy 20,707,342 shares and have cash remaining, for example. Or if I get paid the shares, and so another way to think about it, if I get paid the cash and at the same time SRF decided that it was going to do an APO, and the strike price for that APO was $18.25. That's what the APO price is being offered. Based on where the stock is trading, now would anybody in here buy it at that price? So to me, or to the manager, this transaction makes a lot of sense for shareholders, because now the manager has an even greater incentive to ensure that it crystallizes and execute on all the assets that it has on the balance sheet. Because if it doesn't, it's going to lose substantial value from the shares that it has gotten in lieu of cash. So the second issue here is, okay, how can we give shareholders a benefit, an additional benefit from that transaction? Because there's a clear benefit to shareholders. The first is that, okay, there's this liability on the balance sheet, you need to pay me cash. I'm saying, hey, I'm willing to take shares instead of cash. Where's the stock trading at now? $11. What price am I getting the shares at? Substantially above where the stock is trading. That makes sense all day, every day. And that cash, the company can use that cash to go and do additional investments. Now, but how can we provide an additional benefit for shareholders? Well, in the event that over the next 2 years, the stock price surges beyond $18.25, which is where the manager would have done this debt for equity swap. Then we are saying, okay, shareholders, if over the next 2 years, the stock price, let's say, jump to 25 or whatever it goes to. Why? Because the manager has obviously executed on all the assets that he has on his balance sheet. Then we are saying, shareholders, if you were a shareholder on the day where these shares were listed, that the manager got, then you get an option, free of cost, to purchase these shares at $18.25. At any time during that period, if the stock price goes above $18.25. So effectively, we are giving shareholders a 2-for-1, basically. The one, the manager is being more aligned with shareholders because it now has, a decent stake in SRF, which means that no more than ever it needs to crystallize the value of those shares, which, as we can see, is at 10-11 substantial discount to book value. So that's one. Two, it provides the firm with additional cash that it can go and utilize and deploy into new assets to generate even more value. And three, if the manager does what it says it can do and executes and the stock price rises above the $18.25, investors get another bonus. So that, from the manager's point of view, is aligning the interest of the manager even more with shareholders. Finally, 3 points on the future strategy. So what are we focused on over the next 18-24 months? First and most important thing, execute on our key strategic projects. So we have one Belmont, that is pretty much done, but we need to now execute on the crystallization of the cash, and we have a unique value proposition that will represent for investors to participate in the exit. Miami Bay, which is in the hospitality sector, we need to make a decision and then execute, because Miami Bay is now part of our second investment life cycle project. Lake Spen, which is in the industrial sector, same thing. We have already started that. and hopefully we can, as we go through time, we'll give you more and more information when we think it's appropriate to do so, because we don't like to make announcements and then, we cannot follow through. Last 2 points on this first bullet, joint ventures. Everybody, you have good land in good location and you want to unlock the value, just link we. We can unlock the value for you. Link we up. And there, David is there and the real estate team is there. Link we up. We can unlock the value for you. And we're not guessing. We have the expertise in-house. We built up a team to do it. So link we up. So that's one of the main ways in which we're going to actually select, prioritize, and execute on joint venture agreements. And then real estate investment notes, which are third-party projects. If you have a project that you're executing and you want financing for it, again, same thing. Link us up and we can provide assistance with that. That's what we exist to do. Second point here is realignment of the balance sheet. I would have shown where you have interest income, interest expense, and then you have lease income. And I said before, we are at the end of the first investment life cycle, so we're going to have this happening and then this happening. So we're going to restructure that in terms of rebalancing to ensure that our interest income is more aligned with our interest expense and then generating substantially more lease income from projects that we're executing. We're not going to buy real estate to generate lease income. We build it ourselves. And then the second point underneath the real alignment of the balance sheet is obviously financing. So we are in the process of raising debt capital, which will be used to complement the cash that we have from our exits to actually execute on our key strategic projects that I would have pointed out in bullet point number 1. And then the final point is distribution to shareholders. And I know that I've spoken about this many times before. So at the appropriate time, we will have our first distribution and just continue having those distributions on a go-forward basis. Thank you very much.
Thank you, Jason. As usual, a very detailed presentation, and you have been sufficiently informed now. So I will declare the first question and answer segment open, and I'll just invite Gregory to come to the podium and we'll take your questions. Please raise your hands, indicate, and we'll take your questions now. Thank you.
Thank you, Mr. Chairman. I think we have the first question. Can you please give your name and then go ahead?
Pleasant good morning, Mr. Chairman. Lancel Bloomfield, shareholder. 2 questions. Mr. Chairman, page 48, note 19, retained earnings. You have a retained earnings of $3.08 billion. And even though you have touched on this dividend matter a little, what are the concrete plans for the payments of dividends, seeing that you have such massive amount in your retained accounts?
Thank you very much for that observation. So it's very simple. We are exiting multiple real estate projects as we speak. And once we get that cash from the exit, we make our first dividend payment and then continue paying. So, as I would have mentioned before, at the front end, we deploy the capital and we report the financials according to what the financial statement is. But the cash comes at the back end when you actually exit. So I'm saying we are now in the process of, as I would have gone through in length, detail, of exiting, and I would expect that I don't want to put a date and then you hold me to it, because last time I did that, I didn't keep my commitment. But needless to say that we are working on that to crystallize those and start making our first dividend payment. I don't know how else to say it without committing myself to a specific date. But rest assured that I don't like making promises that I can't keep. So we are doing everything to ensure that as we exit, we start giving us shareholders some cash in our hand. because shareholders have been very patient.
All right. That beautiful edifice known as One Belmont, the architects and engineers that designed and built that facilities, were they a Jamaican company or a foreign company?
Good question. So the architect is absolutely one of the best Jamaican architects. You want to reveal it? Yes, the architect is a Jamaican architect, but the designers were overseas designers.
Thank you very much.
Local, sorry. Local company. So is my mic on? You turn on my mic live?
Mr. Bromfield, thank you very much for that question. I'm David Cummings, Vice President and Head of Real Estate. And I'm glad you asked it because I think Jamaica needs to know the value of what we have created here because it was a Jamaican design. The designer is Ewan Darling. Unfortunately, he died last year, but his company lives on. It's called Virtuoso Architects. That is a wholly owned Jamaican company. And the inspiration behind the design was a bird out of South America. But I can assure you and all of Jamaica that it was a Jamaican designer trained here at the School of Architecture at University of Technology, a Jamaican company that designed it. And the structural engineer, who was the one who designed the earthquake performance and the hurricane resistance of the building, was also a Jamaican, Mr. Peter Jarvis, and his company, Peter Jarvis and Associates, is a wholly owned and bred Jamaican company. So what you have there is a beautiful building that was designed by Jamaicans, and it's so they rest assured that that was envisioned by Jamaicans.
Morning, Greg.
Morning, go ahead, Mr. Professor.
David O, shareholder. Jason, you can get back up again, please. So, Sir Masada did not give any context as to which kind of questions could be directed now, but earlier you, on the screen again, mentioned dividends. So where are you in terms of the completion of the partial exit One Belmont, and have you successfully completed the full exit of Spanish Penwood?
So, good question. So, let me deal with the last one first. The Spanish Penwood, we still have about 17% to exit, and we may actually not exit it. We may keep it because there's actually more value to keeping it than exiting based on how it's structured. But, yeah, so that's still there. In terms of One Belmont, what we are doing now is have the prospective tenants going through the designs of their interior build-out with a view to them obviously starting the clock on lease payments, and simultaneously we are structuring our exit in a way such that SRF at its option can maintain a stake in the asset, one, and two, to allow institutional investors, primarily pension funds, and secondly, retail investors, to participate in the cash flow generation capacity of One Belmont. So where we are in that, we're at the early stages. We are, I think we have a pretty good idea on the vehicle that we want to use, how the vehicle should be structured. We have already kind of canvassed our market read. And so the next step, obviously, would be to represent to the investing public the opportunity to participate in the cash flows of One Belmont. So we would expect that that would occur close to, I would say, late third quarter.
Late third quarter for SRF or for
no, calendar year. That's what I would that's what I would say, just to be conservative. 'Cause you know, yeah, we have to go through a number of hoops. Obviously, we have to do registration. Once it's an investment for people to participate in, you have to go through a whole regulatory process, as you are very well aware. So it's a unique. The way we're structuring is going to be a bit unique. So yeah, that's the timeline I would put on it.
I can infer what you're saying, but don't worry. That's another conversation for another day. So basically, what you're saying is, in effect, based on the timing for the completion, in this case, One Belmont, and the potential proceeds from the JV, that a potential dividend is looking more so like a late calendar year, well, I should say later in the year timeline, basically.
Again, I gave a commitment last AGM, and I fell on my face. I'm not going to give any other commitment other than to say that we are absolutely pushing very hard to make the first, and I'm going to call it a distribution, the first distribution.
No, I understand there's a difference between distribution and dividends, I get it.
Yeah.
And I can potentially presume that the retention of potential units or ownership value in the property, or the vehicle that was used, is more so to benefit from cap rate expansion and valuation expansion as time progresses later on.
You're a very smart man, yes.
I could work with you, but that's another story for another day. And then, with respect to the next phase of SRF, so you mentioned, the next two major targets for progression in terms of real estate assets to be monetized would be the Lakes Bend property and the Mammy property.
Well, those are not the only ones being monetized. What I'm saying is there are two key strategic projects, two key strategic assets, and so our time and attention is going to primarily be focused on those two assets. Not that we are ignoring the other assets and we're not monetizing them. Absolutely monetizing many other assets on the balance sheet, for sure. But I just wanted to highlight the substantive nature of those assets. They are large. So if we spend most of our time on those, clearly it bring a lot more value to SRF and obviously to shareholders. But we're absolutely executing on many other assets and monetizing many other assets in different ways.
You're basically playing the current cycle and looking to benefit from where the greatest ROE can be derived alongside the greatest potential value as Jamaica's economic and business activity expands. That's really just it. No, because I understand the context we're focusing on Lakes Bend and Mammy Bay. And you have the inventory of other properties in the portfolio.
Yes.
So the next question would be, considering that there's going to be this 2-year gestation period where the management fees are reduced, that begs the question, what will SRF be doing in terms of scouting for more, I should say, forms of raw material, being the real estate, to add to its inventory, rather be it, in Jamaica or, in the rest of the Caribbean?
Good question, right? So, as I said before, joint venture is going to be one of the primary means that we push SRF in terms of executing and identifying new projects where somebody have the land. I don't want to buy the land, man, right? Let's enter into a partnership and execute. And the partnership can take many forms because we can structure anything, right? From a pin to an anchor. Obviously, in terms of other markets, we also have quite a number of opportunities to partner with persons in our market, and we're looking at that. But again, we want to be very focused and deliberate. We have two big assets on our balance sheet, and we're zeroing in and focusing and executing on those. Not that we're not looking at other things, but that's our immediate focus to execute, because we think that we can, based on where we are in the cycle, we can extract substantial value from those two assets. Of course, every day the real estate team gets a lot of opportunities that are at different levels of screening and to look at and execute, etc. But I want to highlight that we have two big assets on the balance sheet, and we're focusing on monetizing those two big assets. That's like that's our strategy. Not that we're not doing anything else, but that's the strategy for the next 18, 24 months.
So just one more question and then a comment. So basically with the REIN section of your portfolio, REIN meaning real estate investment notes, is that you're going to be a lot more circumspect with some of the projects that you look towards, meaning even if it's residential, you're not going to expose yourself.
No. We absolutely have a strategy to ramp up REINs as well in order to get interest income, higher levels of interest income flowing through from the balance sheet through to the income statement, right? We're doing that. But we call that, what you call it, business as usual. That's a regular thing, right? It's like we view investing in REINs as a regular part of what we do every day, which is different from, strategic execution of a 14-acre beachfront property. That's very different from looking at a REIN to deploy $1 billion or 500 million or whatever. Miami Bay's 5 billion plus, and Lake's Penny is almost 3 billion, right? So we have to zero in on those. But we are doing REINs, man. We're doing that, but we don't view that as any strategic thing. That's just a regular thing to do. So we are doing a lot of that to get interest income up.
Thanks. And I was going to say, thanks, Head Baker Morris. Everybody, all the shareholders are looking to the great cake you're baking right now.
Sorry.
Any more questions? Any questions online? Okay, thank you very much. I guess the impressive results doesn't fact a lot of questions. Over to you, Mr. Chairman.
Thank you, Greg. Okay, there being no further questions, I will now formally propose resolution number 1, that the audited accounts for the company for the year ended August 31, 2023, and the reports of the directors and the auditors circulated with the notice convening the meeting be and are hereby adopted. All those in favor, please indicate by raise of hands. For those persons who are voting online, please go to the option and select for or against. Okay? So inside the room, can I just ask all persons voting in favor to raise your hands? In favor?
And those against?
Okay.
Thank you.
Just waiting for the votes to be tallied.
A total of 34 votes, 34 in favor, none against.
Okay. I therefore declare that the resolution has carried. We'll move to the second item of business. So Articles 149 and 150 of the Company's amended and restated Articles of Association provides that 1/3 of the board, other than the managing director, if one is appointed, and directors appointed by the holder of the special share, or if the member or members of the board is not 3 or a multiple of 3, then the number nearest to 1/3 shall retire from office at each annual general meeting. The directors retiring under the articles are Ms. Elizabeth Stair and Mr. David Cummings, who, being eligible, offer themselves for re-election. The proposed resolutions are as follows: that Ms. Elizabeth Stair, who retires by rotation in accordance with Articles 149 and 150 of the Company's amended and restated Articles of Association, and who, being eligible, offers herself for re-election as a director of the Company, be re-elected a director of the Company. And that, in the second instance, that Mr. David Cummings, who retires by rotation in accordance with Articles 149 and 150 of the Company's Articles of Association, who, being eligible, offers himself for re-election as a director of the Company, be re-elected a director of the Company. All in favor?
A show of hands for the first resolution. And those against? Thank you. And in favor of Mr. Cummings?
The second resolution, Mr. Cummings. In favor?
By show of hands.
Let me remind the persons.
Thank you. And those against?
Yeah. Let me remind the persons who are voting online to submit their vote for or against using the online platform.
For Director Steer, a total of 33 votes, all in favor. And for Director Cummings, a total of 34 votes, all in favor.
Okay. I therefore declare that the motion on both resolutions have carried. So, Director Cummings and Director Steer, congratulations. You have been re-elected for a further term. Okay, I move on to resolution number 3, that the amount shown in the audited accounts of the company for the financial year ended August 31, 2023, as remuneration to the directors for their services be and is hereby approved. Once again, for those persons present in the room, you will vote by raising your hands. So all in favor, I'll ask you to raise your hands. For those persons who are voting online, you could go ahead and select your option, whether it's for or against the resolution, and you will have 2 minutes to vote. So those for?
And those against? Thank you. A total of 34 votes, 34 in favor, none against.
Okay. I therefore declare that the resolution has carried. There are 34 votes and all in favor. So moving on to item number 4, the appointment of auditors. That KPMG Chartered Accountants, having agreed to continue in office as auditors, be and are hereby appointed auditors of the company to hold office until the next annual general meeting at a remuneration to be agreed by the directors of the company. Once again, for persons in this room, we will vote by a show of hands, and for persons using the e-platform, you will submit your vote for or against. For those voting in favor of the resolution, please raise your hand now.
And those against? Thank you. A total of 36 votes, 36 in favor, none against.
Okay. 36 votes, all in favor. I therefore declare that the resolution has carried. We move to item number 5, the ratification of the PIK share or payment in kind shares. That the resolution of the Board of Directors to issue 20,707,342 ordinary shares to SYGNUS Capital Limited or its nominee in consideration for performance fee in the amount of $377,909,003 Jamaican dollars at a conversion price of $18.25 Jamaican per Jamaican dollar ordinary share, be and is hereby ratified, confirmed and approved, and that such shares be converted to stock units upon being issued by the company, and that the company be and is hereby authorized to make an application to the Jamaica Stock Exchange for the supplemental listing of such stock units. Once again, for those persons who are in this room, I'll ask you to vote by raising your hand for the resolution at this point in time. For persons voting online, you could go ahead and select for or against on the e-platform. So those for the resolution, please raise your hand.
And those against? Thank you. A total of 41 votes, 31 for, 10 against.
Okay. So a total of 41 votes, 31 for, 10 against. I therefore declare that the resolution carried. Resolution number 6, issue of warrants. That's subject to and conditional upon resolution 5 being approved by an ordinary resolution of stockholders, and with the aim of minimizing the impact to stockholders due to the issue of the payment in kind shares, that the company be and is hereby authorized to issue an allotment of warrants to stockholders on record on an issue date to be declared and notified by the board of directors to the Jamaica Stock Exchange at a warrant price of Jamaican dollars $18.25 per Jamaican dollar ordinary share, or US dollars 12 cents per US dollar ordinary share. Upon the exercise of a warrant, the shares issued will be converted to stock units, and that the company be and is hereby authorized to make an application to the Jamaica Stock Exchange for the supplemental listing of such stock units. Further, such warrants shall be subject to the terms and conditions set forth in the shareholder circular attached to the notice of this annual general meeting, which shall be deemed to be incorporated in this resolution. Now we'll take the vote for persons in the room. Once again, I'll ask you to raise your hand if you're voting for the resolution. And for those persons who are voting virtually or online, you can go ahead and select for or against. So those persons voting for, please raise your hand at this point in time.
And those against? Thank you. a total of 42 votes, 32 in favor and 10 against.
Okay. 42 votes, 32 in favor, and 10 against. I therefore declare that the motion has carried. The resolution has carried. At this point, we will have some remarks from Mr. Beresford Gray, CEO of SYGNUS Capital Limited, the investment manager of SYGNUS Real Estate Finance. Beres will be joining us virtually, and I presume that he's, I can see that he's on screen. So Beres, over to you.
Thank you, Mr. Chairman, and good morning, ladies and gentlemen. Welcome to the 2023 AGM for SRF. First, let me congratulate thank you very much. Thank you. First, let me congratulate the SYGNUS Real Estate team, the Board of Directors of Real Estate Finance, and most importantly, the shareholders of SYGNUS Real Estate Finance. On the completion of One Belmont, excuse me 1 second, is there a feedback? Right, let me start again. Firstly, I would like to congratulate the SYGNUS Real Estate Finance team, the shareholders of SYGNUS Real Estate Finance, the directors of SYGNUS Real Estate Finance, and of course, the wider SYGNUS team on the delivery of the One Belmont project and the Spanish Penwood project during the 2023 fiscal. Those are two key milestone projects in the life of SYGNUS Real Estate Finance. And as Jason indicated, in our quest and commitment to create value for our shareholders. Today, I want to spend my time, and I will be brief, because Jason has delivered a comprehensive and wonderful presentation that really captures most of what we as SYGNUS want to communicate to shareholders. Nonetheless, I'll spend my time to really articulate a little bit more around the idea of value. And the reason why I want to talk around that is because at the end of the day, our job is to create value for you, our investors. And sometimes the stock market and the stock price from a point to point can cause distortion and take away from the fundamental value that is created and is reflected in a business model. So I just want to spend some time. I know Jason talked about it, but it's important for me to articulate this to our shareholders. Firstly, during the history of SRF, we have delivered profit every single year for investors. And this profit is really driven by strategic decisions. Some of those strategic decisions include investing in high-valued land, which we will either monetize at some point in the future in various ways. Some of this value is created through the development and delivery and exit of projects such as One Belmont and Spanish Penwood, which we exited partially last year. And all of that is reflected today in the book value that we are seeing of 23 cents per share. My contention, though, is that SYGNUS Real Estate Finance, which has established itself as one of the premier real estate investors in the Jamaica market, and the stock market is trading at roughly 50-55% below its book value at 10.49. When I dig further, we are trading relative to peer group at the lowest discount to book value. Yet, our return on equity is more attractive. Our return on equity is 23%, which is, I would challenge you to find many stocks on the Jamaica stock market that generate that type of return on equity. That's our average return on equity over the last 4 years. I would challenge you to find many stocks that have done so well for investors.
SCI paid more dividends.
And I'm not talking in a vacuum here, because the reality is that you can observe the actual assets and investment in these assets that have delivered that type of value to shareholder. So if you look at our stock today, I will contend that by any measure, the market is trading the stock below, at a discount. And hence there is an opportunity for savvy investor to take advantage of that. And I'll stop at that point for now. The only good thing around the stock price, apart from the opportunity I mentioned, is that when I look on a year-over-year basis, we are the only peer group stock that have gone up 19%. So it seems as if some investors starting to observe what is going on in the market. Maybe the One Belmont project or the Spanish Penwood project start exciting them a little bit. So that's a positive. So investors and the market start to observe the opportunity. You as shareholders should actually observe that opportunity, because you come to AGM every year and Jason distill the most complex information such that everyone could understand. The other point I want to speak to around value, and this is probably the most important point for you to reflect on, is that as managers, SYGNUS, as manager of SRF, have made the commitment and have shown and illustrate our commitment to take our performance fee in the form of PIC shares, effectively in the form of shares. So we are saying to you, we have no form of doubt, concern whatsoever about the value that exists, about the capacity of our team to create and drive growth and value for you. No doubt about the long-term strategies of SRF, and most importantly, no doubt about the robustness of this business model. And hence, we are saying to you that we want to fully align, and have done so, our interests as the manager of your capital and your investments with ours. And hence the reason why we take the PIC shares. So we are delivering value for investors, and I'm imploring investors to observe the opportunity that exists with our stock. So let me talk then about the second thing, opportunities. We have finished our second, today we will finish our second AGM. Finish a fiscal, and we are now wrapping up our first development cycle, right? Jason had mentioned it. Last year we were in the middle or the tail end of our first development cycle. So now we want to redeploy capital into a new development cycle. So what are the opportunities that we are looking at? And when we think about opportunities, we start from first principle. What are the areas that we have great or strong conviction about based on research? And are we positioned to take advantage of those opportunities? I.e., you can have conviction, for example, around something, but you are not positioned and capable of taking advantage. So you have to really understand that as shareholders and as investors and investment managers. Those are the type of things that we think about. So the first area of real estate investment that we have strong conviction about is the industrial commercial space. That's warehouses, etc. We have seen a steady demand for high quality warehouse space right across the board. In Kingston, along the highway, along the wharf. As a matter of fact, along the wharf area, there's no more land available. The good thing for us as SYGNUS Real Estate Finance is that we have 55 acres of land in Bernard Lodge that we intend to monetize as part of our second phase of our second development cycle. And as a consequence, we are well positioned to take advantage of this conviction. The second opportunity that we see, and this one might not be very apparent to a lot of people, is there are still strong opportunity in the commercial real estate office building space, A-class building like One Belmont. Let me share with you a little bit of data. Right now, if you drive around Kingston, you will see a lot of office building going up. A few of them are BPO, so those are rented in the region of $20 to $23, let's say, per square foot, and typically are single tenant. The others are for office purposes, and the A-class buildings, these are the ones that are not quite as fancy as your One Belmont property, but acceptable. If you look at the total, and I had a discussion with a few real estate agents, and they sort of give me some data. The total square feet of building, including One Belmont, is around 400,000 square feet of office building that has gone up and in various phases. Some in completion phase like One Belmont, others are in the early stage of development. However, there's no abatement in the rent. The rent has gone up as well. Rent right now for A-class building is between $25 to $30 per square feet. I think, you see a lot of spaces averaging closer to 25, 27, right? When we started One Belmont a few years ago, rent was in the region of $23 per square feet. So even though so much buildings are going up, there's still a strong demand, driven a lot by the fact that before we started One Belmont, there was a huge shortage and not a lot of new A-class building being developed. So what you're seeing now in the market is a lot of migration from the older buildings to the new build. And of course, you have the expansion of businesses that are filling up this building. So there's still a lot of potential there, and we expect to take advantage of those through identify the right properties, right location, and entering strategic partnerships such as JVs that will avoid us having to let's say, well, let me put it another way, to allow us to drive IRR and investor return. So we have strong conviction around that area of the market, and we are well positioned, just finishing one Belmont, and we are well positioned to take advantage of that space. You know, David will tell you that his pipeline, he probably have about 10 potential opportunities that he's assessing at the moment. Resort market, I don't need to elaborate on this. There is a strong demand for villas and condos building on the North Coast. And that demand is beyond our shore. You have the local demand and you have the international demand. Is SYGNUS Real Estate Finance positioned to take advantage of this conviction? And I think last year when we talked, I mentioned that we have a lot of research, a lot of data that show demand in the premium and the luxury market, and that's been growing. It's very robust. Is SYGNUS Real Estate Finance well positioned to take care of that conviction? The answer to that is we have probably the most beautiful property available on the North Coast at the moment in the form of Miami Bay, which Jason mentioned we are in the process of monetizing. So if what I said a while ago is true and based in fact, then the upside that you are looking at in the next development cycle of SYGNUS Real Estate Finance is likely to outstrip what we have done before, because now we have more experience, we are improving our dry powder, we have built a lot of strategic partnerships, we have more data, and we have narrowed down our focus to areas of the market where we have strong conviction around demand and the ability to generate value. My final point, of course, and I always have to speak to this. If I don't speak to things like this, of course, then you can't believe that SYGNUS Real Estate Finance and SYGNUS is a serious alternative investment manager. Risk, headwinds in the market. Our governance process is designed, as we always reiterate, to enable us to focus not only on the upside, which I just described, but also on downside protection for you. And we continue to build on that. We continue to take information from the first cycle of development to improve our processes, our policies, improve our execution capability. David and his team are, without a doubt, the best execution team in the market. We continue to develop strategic and surgical approach to how we invest in real estate, such that at the end of the day, whatever the headwinds are, we are able to withstand them. What's the biggest headwind in the market now that we are watching carefully? The biggest headwind in the Jamaica space at the moment is the high interest rate environment. High interest rate obviously will impact cost of capital, and it will impact the financing of projects, and in effect reduce your IRR if we don't manage that carefully. So we are observing that space, and we are being strategic about how we deal with the headwind of high interest rate. We are managing the balance sheet of the business carefully. Jason speak to some of that. We are making sure that we pay attention to our debt stock and how that is financed. We are making sure that we increase and improve our dry powder consistently so that we don't have to fund every project with too much leverage, because the high interest rate is going to eat into the returns. On the other side, we are deploying more capital into REINs so that we too can get some of the benefit of the high interest rate in the market. The other headwind that everyone in this room is very aware of is the increasing cost of doing business, and in particularly real estate business. And most of that is really material costs. I think we've been dealing with that for some time now, and we have figured out ways to manage that. As a matter of fact, material costs, a lot of developers and investors will tell you, have eaten significantly into profit and expected return. So we have to be very aware and strategic around how we manage material costs. The other big cost is land costs. Land costs has gone up significantly over the last 5 years. We have benefited from that, obviously, because we have quite some of the primest lands in Kingston. So we have benefited from that, so we are very happy for that on the one hand. But on the other hand, when you are looking at a new development now, if you are to acquire land, or even if you acquired land a few years ago and want to develop it, the combined cost of the land and the material cost, when you add that to development costs, it can eat into your IRR. So we have to be very careful and surgical around that. And some of the things that we are doing, obviously, is to focus on segment with the greatest opportunity. For example, it's unlikely that in the short term, in this environment, you will see us having any conviction around the residential space in Kingston, especially when you talk about the premium and the high end. We don't have a conviction around the ability to generate returns and hit the type of IRR that we want in that space at the moment. That's why you see it wasn't part of the opportunity set that we see. We have to be patient. Investment is about being patient. It's about being thorough with your analysis, and it's about timing. So we have to be patient and very prudent in the way we approach investment decision. And finally, strategic partnerships such as JV to drive IRR. At the end of the day, our job, as I said before, is about creating value. We have done a great job for you over the last 4 years. 4 years going. I know that investors are concerned about dividend payment. We will take care of that in the short term, as Jason mentioned. But most importantly, make no doubt about it, SYGNUS Real Estate Finance has executed on a business model that was able to generate significant value for investors, and it is manifesting itself in some of the iconic projects that we have done over the last couple of years, with One Belmont being the prime one. We continue on this journey to deliver value for you, and we have strong conviction in areas that we have positioned ourselves to take advantage of the opportunity set. I want to just leave that with you, ladies and gentlemen, and thanks again for attending this AGM. And thanks again for the faith and commitment to SYGNUS Real Estate Finance.
We thank Beres for those comments, and I don't need to repeat what he's just said, but he highlighted the value that may be lying in front of us, the value that's latent in the company, and the value creation that we have, and the opportunity that is presented to us at the same time. So at this point in time, I want to thank us all for our participation so far. But we'll open the floor once more for our second question and answer segment. And I'll just ask Greg to come and moderate that again. I'll invite you all to raise your hands and let raise those questions so that you can get even more information than that which we've given you so far. Thank you.
Thanks, Mr. Chairman. I think so. We have a hand to my right. Can you give us your name, sir, and then go ahead with the questions?
All right. Greetings, everyone. The name is Bertram Ferran. I had a few questions. Is Mr. Berry still on the line? I was wondering if the pandemic influenced his convictions.
Barris, you want to go ahead?
Yeah. The pandemic, of course, the pandemic gave us data. But we have to view the pandemic for what it is. The pandemic is a once in a lifetime, well, it's not even a lifetime, once in a 100-year event. So the question is, or maybe you're asking if, do we see a shift from commercial real estate due to the pandemic, because you have now some companies in the world, and many companies in the world, work from home is a part of their strategy. And yeah, correct. And of course, from our point of view, we look at what is going on in our environment. If I was in New York or in the US, then my conviction in the commercial real estate space would be different. My conviction would actually be in the residential space, because in big cities like New York, what you are seeing is that you are converting office buildings into residential condos. In our world, we are not there yet in Jamaica, and so that's a good thing. Meaning a good thing from a commercial real estate point of view. And there's a lot of old buildings in Kingston where you have a lot of migration. So, for example, if you look at One Belmont, for example, except for one of our tenants, the other tenants are migrating from older buildings. And I could identify at least 2 more properties, new properties, that tenants are migrating from older buildings, because you haven't really had that stock of buildings being developed to absorb either the expansion of businesses or give them the necessary comfort that they need. So that's some of the data driving our conviction in the commercial real estate space.
All right, thank you. And let's ask one more. I've been hearing about this concept of beneficial ownership from the Companies Office of Jamaica. Is SYGNUS compliant? I think there are some new requirements, different forms to fill out, and different procedures to put in place. Beneficial ownership.
I'll ask my head of compliance to, I could answer, but I'll ask my head of compliance, Sterling, to answer that question.
Thank you, Barris. Thank you, Mr. Ferrara. Yes, we are in fact compliant. I want to also say that SYGNUS Real Estate Finance, which you are a shareholder of, is actually a St. Lucian-based company, and we're also compliant in that jurisdiction as well. What you have some Jamaican subsidiaries of SYGNUS Real Estate Finance, which is SYGNUS Real Estate Jamaica Limited. That entity is registered in Jamaica, and we are in fact compliant. It's a new regime, a new process. So, of course, the Companies Office themselves in Jamaica is still trying to, formulate that. One of our councils went to a session this week, and they themselves are, helping Jamaicans and us in general just to understand what it requires. But I think in another year or so, everything will be fine-tuned. But for now, all the entities that we have registered in Jamaica are in fact compliant. Thanks for that question. Right?
Any questions online, Abby?
Yeah, you heard me? No? Is this on? Hello? Okay. It says here from Judith Evans, if investors were to invest in one Belmont after SRF has exited, what kind of return should they expect to achieve?
All right, Jason, I'll ask you to take this one.
Thanks for that. Thanks for that question. Well, it depends on the final structure that we come out with. But ballpark, I assume that there would be a cash yield component that can range from anywhere between, I don't know, above 5%, and then obviously perhaps some capital appreciation. But we haven't we haven't evaluated that as yet. But you'll have lots of opportunity to evaluate the transaction on its own merit at the appropriate time.
Any more questions online? Okay, I think that comes to the end of our question and answer segment. I just want to leave with our shareholders here today. Since our inception in August 2019, there's never a single year that SRF has failed to deliver profitability. I think Beres mentioned it. The first year, we would have delivered over 300 million, went up to over $1 billion in the following year. And of course, the profit will fluctuate because of the nature of the business. We're in construction, and Jason mentioned the investment cycle, which is between 18 to 24 months construction period on average, another 6 to 12 months to exit that asset, meaning you sell the unit, etc. That gives us a 3-year cycle. We are basically there now, and that will put us in a position to harvest, so we have cash to satisfy the demand of a dividend in some time thereafter. Thank you very much, and over to you, Mr. Chairman.
Thanks once again, Greg. And thanks once again, shareholders, for your participation in this meeting. I am going to now invite Director Cummings to come and move the vote of thanks. We're drawing pretty close to the end of our program. Director Cummings.
Thank you, Chair. Chairman, shareholders, directors, members of the media, ladies and gentlemen, good afternoon. Last May, I had the honor to stand here as we concluded our very first year of operations as a publicly listed entity. Fast forward to now, March 2024, and the honor is once again mine to herald the conclusion of our second annual general meeting by moving the vote of thanks on behalf of SYGNUS Real Estate Finance and indeed the SYGNUS Group. First, thank you to everyone who has taken the time to be with us here this morning, whether you were able to do so in person or joined us virtually. Thank you for your trust, and we want to reassure you that we strive every single day to maintain and continue to grow your confidence in SRF to deliver strong results and to preserve your shareholder value. Thank you, our valued shareholders, for considering and passing the 6 resolutions presented. As you have seen demonstrated here today, SYGNUS Real Estate Finance is continuing in its stride in the creation of value for our investors, shareholders, and partners. We remain strong on innovation, conceptualization, development management, establishing partnerships, and ultimately in project execution. Thank you as well to the myriad of professionals in the entire real estate and construction industries who support our project execution, including a myriad of architects, real estate agents, engineers, quantity surveyors, land surveyors, attorneys, contractors, suppliers, and project managers, to name a few. These many partnerships were the cornerstone of the teams that enable the delivery of the projects that you heard about today, and undoubtedly those yet to come. To the chairman of SRF, Mr. Horace Misado, and board of directors, and to the president and CEO of the SYGNUS Group, Mr. Beresford Gray, thank you for your continued robust leadership in guiding the company in the achievement of these results. We also express our gratitude to the innovative and industrious teams within SYGNUS Group who contribute to these results. I think that it is important for you all to recognize some of the teams that stand behind SRF, working tirelessly to maintain and to grow your value. Let me single out Jason, Justine, Kyle, Andre, and Nicolette on the investment management team, Stephen, Avon, and Malik on the private equity team, Monique, Jackie, Sharon, and her finance army, who literally have no weekends off as they move from audit to audit, Yashi and the risk management team, Greg, Stephen, and the investment banking team, Liz and Renee on the marketing team, Serlin, Andrew, Shamon on the legal and compliance team. I see Marcia here as well. All of whom are supported by an entire cast of other business units within SYGNUS who all help to deliver this performance. Last, but by no means least, let me highlight my own real estate team of Andrew, Dwayne, and Peter Gay, who are the lions and lioness out there on the ground, roaming the safari to create the value. Thank you all. The takeaway from me highlighting this important cast is the fact that behind SRF is a robust team of hard-working professionals whose relentless aim is, simply put, working for you. I also must highlight the work of our team of real estate consultants who form a committee known as our Real Estate Investment and Advisory Committee, and in particular, the external member of that committee, Mr. Jeremy Brown, who was not able to be with us today. As we did last year, we remain forever grateful to the memory of Mr. Peter Rousseau from our REACT committee and Mr. Ewan Darlin, the architect for our One Belmont project, both of whom left us last year, and we sincerely hope that these gentlemen continue to rest in eternal peace and that their respective families find solace in the indelible mark that they left on us all. As you are aware, it takes a collaborative effort to successfully stage events of this nature, and so we now recognize those directly and indirectly involved in bringing this to reality. We extend our thanks to our General Counsel and Head of Legal and Compliance, Serlin Hudson, and her team, who spent many hours in planning and organizing this second AGM for SRF. Thanks also to the SYGNUS marketing team, who invested so much energy into assembling this production, and let me now single out a few of those as I close. The production team includes Phase 3 for the audio and video, the Affinity team for establishing the online streaming platform and facilitating voting, Agile, our IT partner, Reasons and Seasons for the decor, and of course, Jose, as always, our videographer, and we know he'll be sharing the media on multiple platforms later on. The team also includes Sarah and her Simply Dandy team for the production of the annual report, written by our investment management team, and also for the social media content. We give credit, of course, in advance to the media as a whole for their anticipated coverage of this event. We would like to express our appreciation to the management and staff of the AC Marriott Hotel for their impeccable hosting and overall support, and to all of the other unsung heroes behind the scenes who I may not have named, we acknowledge and thank you. Finally, let me also thank our auditors, KPMG for the audited financials, and of course Digicel for enabling Wi-Fi support for this AGM. Once again, thank you all for attending the second annual general meeting of SYGNUS Real Estate Finance, and we look forward to seeing you all next year. May God bless you all, and let's do our part to make 2024 a safe one. Thank you.
If we're in church, I would say amen, and we could leave. But this brings us to the end of SRF's 2023 Annual General Meeting. On behalf of the board and the management, I'd like to thank you all for attending today's meeting and for your continued support. We look forward to your attendance at the 2024 Annual General Meeting. And I'd like to use this opportunity in closing to encourage our members who do not have an email on file to update your records at the registrar so that we can maintain contact with you, and we definitely look forward to seeing you in 2025 when we will have our 2024 AGM. Thank you very much for attending once again.